Greetings, everybody. This is Frank from Money in the Bank with Frank. We have a great segment coming up. I have an interview with AJ Loiacono, the CEO of Capital RX. I went to the Invest 2022 digital healthcare event yesterday. It was fantastic. Great thoughts, great ideas, and it's definitely going to fuel several more segments with things that, as I unpack them, I guess, you can find more, again, on Money in the Bank with Frank, on our YouTube channel, and wherever you hear podcasts. But I hope you enjoy this interview. Thanks. AJ, thanks for joining me here on Money in the Bank with Frank. It was an enlightening conversation you had on the Invest Digital Health.
Yeah, thanks for having me, Frank.
Yeah, I appreciate it. So there's a couple of things that I kind of brought to my attention as somebody in the financial services industry who sells 401k plans, retirement plans, as well as life and health insurance here in Texas. I have just a real brief story personally that happened to me over at my doctor. I went to the doctor, did my just standard checkup, and Blue Cross Blue Shield, who handles my life insurance or my health insurance policy, obviously they have their PBM. I have no idea who it is, but when I went to the doctor specifically said to me, who do you want your prescription to? And I don't know, right? So I picked the one that's closest to my house. Now there are three, just as close as any of the rest of them to my house. And I, knowing enough about what was going on, I actually not only, I said CVS originally, and then I started calling the pharmacies to find out exactly how much the drug was going to be at the pharmacy, specifically using my plan. And I found the one that was the cheapest. And then when I realized, I had Good RX, and I downloaded Cap RX, and all three of them were totally radically different. One was in the 700s, and then Cap RX was like $22. So really, I feel like as somebody who actually not only is using the plan personally, as we all do if you have a health insurance plan, but as someone who sells it, I don't really ever have the opportunity. I show pricing on health insurance, and the PBM is kind of a sidecar.
Yeah. So
my small employers who are actually buying those policies are really just looking at it at price. But you mentioned a statistic somewhere in the high 20% range, where that's actually the highest part of health insurance. So.
Yeah, I think a lot to unpack there. I think the first one is back to your experience of calling those pharmacies. What's fascinating is if you called the next day, you'd get a totally different set of prices, because the way that spread pricing works from incumbent or traditional PBMs and carriers is this notion of they can just affix any price at the point of sale. And that's the horrible part of the old way of doing business. Now you have someone like Capital RX comes around, this will never happen. The price remains the same price until either A, the pharmacy wants to provide a lower price, or CMS, which is where we get our pricing. We use NADAC, National Average Drug Acquisition Cost. But the point of it is the price will only change until the federal government says, hey, here's the new acquisition cost for this drug. So you won't see that artificial variability. The other thing that you discovered is it's one price. Everyone gets the same price. Under the system that exists today, everyone is getting a different price. So it looks like drug prices change every hour of every day in every pharmacy for every medication. And it's a complete lie. And so I think the best any employer group, first and foremost, they could do is use Capital RX. The second thing is if you don't have us, then at least use our mobile application or patient portal to use our cash card to discover what a reasonable price is for that medication, and that will give you a sense of transparency on price. But your experience is what 99% of Americans have to deal with every day, or don't even know, and unfortunately are paying that $700.
So you also mentioned something that I'm fully aware of with ERISA and having to have transparency in fee disclosure. You mentioned that someone from the organization could call up, and then there's a clock that starts to get that disclosure back, and then you could figure it out. Now, who has to make that determination? It's my understanding that, with 401k plans, you're going to have to deal with a plan administrator who's going to have to request that information.
Very
so if
similar.
I'm actually using a health insurance plan and I want to know personally as an individual, is it possible unless I'm actually administering that
That's
plan?
an interesting point, Frank. So The way that this amendment to ERISA, this is basically what governs both finance and healthcare in the United States for self-insured entities, so employer groups. So what's interesting is the responsibility or the fiduciary is the plan sponsor. So, the company, the employer group, they're responsible for making sure that they ask everyone, the consultant, the broker, everyone for the disclosures on what they're making. But what you bring up an interesting point is if you're a member of an employer plan, you're an employee or a dependent of an employee, you can make the request of the fiduciary to be like, I just want to make sure that we're getting good, low-priced, high-quality health insurance. And so you can make that request for them to then in turn have to then ask the broker, consultant, and anyone who's making compensation on the health plan for full disclosure of what we call direct and indirect compensation. So, it's interesting. The employee actually has some power here. If they were to put in writing, I would like to know what the disclosures are, then it pushes. Now, to be fair, the employer who's sponsoring the plan should be going to the actual, broker, consultant, and other entities and asking for, they have to every year. They have between now and the end of the year to make that request and then basically determine if there's a conflict of interest or the cost is unreasonable.
Okay, that's really interesting information. Great. Well, I thank you. Thanks for taking the time, and I look forward to learning more about PBM space.
Thanks for having me, Frank.
Yeah, great. Thanks.
Like the golf clap.
All right, well, let's go ahead and get started then. My name is Amanda James. I'm a healthcare journalist at MedCity News. And now we're going to discuss pharmacy benefit managers. PBMs serve as the middlemen between drug makers and patients. As President Biden said yesterday, Americans now pay more for prescription drugs than in any other advanced nation. Which begs the question, is this system broken? And what is the future of PBMs? So without further ado, I'd love to introduce my highly qualified panelists here, and we will start with Wendy for a brief introduction and go down the line.
Perfect. Thank you, Amanda. Appreciate it. Welcome, everyone. Wendy Barnes. I lead RX Benefits. We're a pharmacy benefits optimizer who works on behalf of self-funded small and mid-sized employers to help them get the best price they can. We aggregate the lives and work agnostic to any PBM, and then we manage it from there. And my background is having spent a good decade inside Express Scripts, Cigna, now Evernorth, and previous to that, Rite Aid leading benefits there for the managed care side of the house, and the first half of my career was in the hospital, in the institutional setting. Thanks for having us.
Josh Friedel, I'm a pharmacist by training, but I've been in the managed care space for quite a while. I've been with CVS Health for 19 years. Big portion of that working on product development and management, and now I get the opportunity to lead our product team within the PBM space with the primary objective of how do we take new and existing and emerging capabilities to help lower costs.
Good morning, good afternoon, everyone. I am Snejana Mian, Chief Operating Officer at Transcarent. Transcarent is a brand new health and care experience company that delivers high quality care, transparent information, and ultimate empowerment to the consumer. And in terms of my background, also a pharmacist by training, spent over a decade with Express Scripts, Cigna as well. I'm really excited to have this dialogue on how we transform the pharmacy benefit.
AJ, the CEO of Capital RX. I guess what makes me unique in my role is I've always been in software development, which is why I dress the way I do. In addition to that, I've spent 22 years in the pharmacy supply chain. I guess what also makes me unique is I spent half my career in pharmaceutical manufacturing on the plant side, doing supply chain logistics, really dry work, converting old MRP to MRP2 to ERP platforms, but it's a first-rate education in supply chain logistics and drug pricing if you ever want to try it. Did that for 8 years, and then I flipped over to the payer PBM side, and that's when nothing made sense to me. And well, I'm sure we'll talk about that in a moment, but spent an equal amount of time first auditing and doing procurement for large self-insured payers, and then later starting Capital RX. I've been an entrepreneur for 22 years, so I guess all of my knowledge has been grafted on somehow by experience in industry. Pleasure to be here.
Thank you all for being here. With PBMs, there really is so much to discuss, so I think we should just dive right in. In August, President Biden signed into law the Inflation Reduction Act. This legislation says that Medicare can be involved with drug price negotiations, but it only includes 10 drugs and it doesn't start until 2023. I'd like to get a reaction to this to understand, is this really meaningful?
I'm happy to kick it off. So yeah, sure. Should the federal government be negotiating drug prices better? Absolutely. One of the things I point out is if people have free time and want to read really boring things, CBO put out a report in February of 2021, which basically compared the federal price of brand drugs net cost in the United States. And this is for government contracted things. So this is DOD, VA, Medicare, Medicaid, 340B. And what you would find net cost, which is the important number, is that even the federal government was buying drugs with 150% delta between those schedules. So what chance do we have as payers or patients when even the feds can't figure it out? Now, I think we understand it's been a long journey with a lot of different departments, from HHS to the Department of Labor, that kind of get their hands involved with drug pricing, even the FDA. And I think we have so many moving parts, so I applaud the administration for taking this very important first step. I just wish it was an accelerated pace. But again, let's be supportive with what we have.
Yeah, I would just add, Amanda, I think it starts somewhere, which in fact is to be lauded. So if you're a diabetic patient, you're going to feel a real impact. Your cost is going to be capped at $35 a month. So that's important for diabetics, and they're a major, major portion of healthcare spend. So I view it as an opportunity to keep building upon how we can do better. I think the unfortunate part is we shouldn't have gotten to this point in the first place. If we could have policed ourselves, unfortunately we haven't. So now we're going to add more bureaucracy to the process.
I'll just add two things. We heard it in the earlier session. Sometimes when government gets involved, it can be a bit of a catalyst for change, whether it is the answer or it leads to something else. We heard about the orphan drug status, kind of approval pathway, breakthrough status. I mean, CMS's role in getting EMRs used much more broadly all helped accelerate those things. So we'll see if this is the start of a right direction. To your point, I hope it doesn't lead to too much bureaucracy or a one-size-fits-all model. If we look inside like our commercial organization and comparing to like the $35 cap for insulin that we see in Medicare, we already have the majority of our members paying $35 or less. Through a lot of different ways, plans have decided to go about doing that inside their design. I'd hate to see that get forced into one model in the future.
I would add very similar. I mean, these kinds of acts certainly help serve as a catalyst, and what happens in Medicare, you see it 2 or 3 years later down the line trickle down into the commercial markets, and I do believe it's going to help the commercial market significantly.
Thank you. Okay, so let's talk about how the current system is set up. Do you think that the same company should be allowed to own an insurance business, a PBM, as well as pharmacies?
Are you expecting a no? I mean, I'll go first since that hits on our model dead on. Certainly we would agree. We think it should be. I think the important part we see is there needs to be better integration across the system. And how do you bring these units together? Have we done it perfectly? No. But it gives us an opportunity to do that. And we want to leverage that for better patient experience, better cost management. And I think that's what we ask our clients to hold us to, you being one and others, is like, are we doing a good enough job at managing costs, managing care in an integrated model that does bring those assets together?
I would add, I think conceivably the notion of having all of the points connected, right? Your inpatient, your outpatient, your pharmacy, your medical, that makes sense. We all know holistically that you want to see the whole picture to best manage outcomes. Where the model has gotten tripped up is that the incentives are no longer aligned for the client. And so unfortunately, if you're the client who is all in with all of those services, you're not quite sure what value you're getting in each portion of it. And God forbid if you decide to extricate yourself from, let's use specialty or pharmacy as an example, then suddenly you have financial penalties to do that. And for services that you're no longer buying from an integrated model, you're now paying a penalty for things you're not getting that you're now purchasing outside that collective. And that to me is where the model breaks down a bit, but conceivably the idea of keeping it together, it makes sense on paper, it's just an execution issue.
Well, I think this is a world of rainbows and sunshine you're describing. And, what I see is unfortunately abuse of power. And so one of the things that I point out all the time is something as simple as weaponizing the Affordable Care Act under the accumulator rule. So those of you who are not familiar with it, the accumulator rule under the Affordable Care Act basically says if your medical and pharmacy deductible have to be contributing mutually to achieving your independent or individual out-of-pocket cost. And so what happens is, in the free market we should have, my company will compete for pharmacy benefits and will win, and we'll be awarded the business. And then a medical carrier, oftentimes the vertically integrated entity that lost the business because they couldn't provide a competitive price or service, suddenly says, I shall not share data. I'm going to block you. What is this thing? Now, what's fascinating to me is we're a smaller company, and we do this with over 600 entities. We do it for free, and we oftentimes have to program to someone else's standard. Now, if you're a software developer, you understand this is maybe a half a day's work with someone who's competent. But you'll hear these tales of woe from the vertically integrated carrier. This will take us 6 months and $1 million. And then they say, I'll do it once, but I'm going to charge you $20,000 per data feed for something that represents average size of a file of maybe 100 kilobytes. It's disgusting, this behavior. And so, I've made my complaints. I have certainly pled my case. And over time, we've slowly knocked off various entities. There are some that shall not be named that still fight us tooth and nail to this day. And why? Because how do they expect to be competitive? Because they can't even compete in a fair market. So what they want to do is continue to put up walls, artificial barriers that has nothing to deliver better care. And so I find this behavior reprehensible. I sit here as a witness to the change, but it's slow going, and there's still extraordinarily bad actors out there. In fact, I got a bill from one of the big three the other day saying for the data fee for one of my clients, they were going to just magically double the price. Double the price for something we do for free for the client, and it's in their standard. And I just want everyone to think about this. So the promise of vertical integration in the rainbow and sunshine that people are talking about is great, but let's get back to what we need, which is access to the payer data and no anti-competitive behavior. That's my position.
I would just add, from a consumer standpoint, the system has to be completely gutted and redesigned. And I think we heard in the earlier session, they're ultimately the payers of the care, and they're suffering. They're lost. The healthcare system today has gotten more complex, more confusing, and not affordable at all. And so when you think about that consumer experience, transparency has to be front and center. And where else do we purchase anything else in healthcare or in any other consumer good products without understanding what it's going to cost, what should I expect, what does it mean when I take that medication, what do I need to do to be adherent, where do I need to seek the best care? And I think that's what's fundamentally missing. And so what we're trying to do at Transparent is very similar to what AJ was describing, sort of bringing that transparency to the consumer, but we're doing it across the board, across the medical and the behavioral and the pharmacy benefit, because you can't just have pharmacy in one end of the equation, and you need the data to actually connect all the elements to deliver this comprehensive care. Whether if you're an oncology patient, how do I get oncology care from the screenings to finding the right doctor, to getting the right surgery, to being placed on the right pharmacotherapy, to then getting the support. But I need that trusted guidance, that high quality care, and that transparency throughout the experience. And that's what's fundamentally missing. So when you ask, is the system really working? It's not necessarily today at all. And we got to think about the consumer first. And one member in the audience earlier said, we got to start designing from the center first, consumer first. Everything else has to come around it, and I think we haven't done that today.
Yeah, Shazana, I would also add the predictability that you're talking about isn't just what a patient is looking for, the employer is seeking it too. I mean, they genuinely want to know what they're going to spend, and right now it's a complete black hole full of surprises and an inability to really go at risk and say, okay, here's what we think it's going to cost you, outliers or not, and you're not going to get penalized when that happens.
Let's unpack this a little bit. Josh, I'm curious if you can share your thoughts on what AJ brought up regarding data sharing.
I think you're referring to on the medical side. Is that right, AJ?
Well, it's the pharmacy requires it. So if you're self-insured, we have a unified accumulator now, according to the ACA. And so the problem is that unfortunately there are some entities that don't want to share information because it's the last line of defense to keep the pharmacy benefit, which, to be frank, is where all the profitability is for vertically integrated entities. No one's making money on medical. And so the whole point here is that they will fight dirty to keep it by not sharing data.
Yeah, I mean, I guess I can't speak directly to like what our internal policies or practices are not dealing with it. I can say there's a lot of places where we are sharing data, so I guess I just would have to connect the dots on terms of his gap. But we see that across point solution vendors that need data to support what our clients are hiring them to do and how we share that. We need data, of course, across the organization with other medical providers if we're not the medical provider, just the pharmacy side. So, I mean, I see that being a critical piece. To AJ's point, you can't have innovation, you can't have good interventions to members if the entities that are involved in it don't have the right data. And I know we spend a lot of time sharing it, so just can't speak to that specific one, but I know it's critical to how we practice in this healthcare field.
Yeah, it's purely anti-competitive because it's not a point solution. It's the medical and the pharmacy business that they have today. They don't want to give up the pharmacy, so they lose the business fair and square in an RFP, and then they put their foot down. They're like, well, I'm not sharing data. I had a senior vice president of one of the big three basically tell me to go to hell, and over his dead body, he would ever share data with me. That's the country we live in. And so, oftentimes the only way you can push back is to have a payer that basically says, well, I'm willing to move my medical away from you because of this behavior. And this is how we have connections with 600 other entities. But the whole point of it is there are still very big entities, some of them even here in the state of Texas, that have some of the biggest walls ever and will not share data. And again, it's highly anti-competitive. They're tying two products together. This day shall come where you can't continue to ask for a competitive, efficient market when it's something as simple as just sharing the payer's data. And I want to make it clear, the carrier, the vertically integrated entity, doesn't own the data. Anyone who says it's my data and it's proprietary, and let me tell you, I've sat through enough meetings where vertically integrated carriers get on their soapbox and say, this is proprietary, it's my pricing, no one can see it. And I'm like, that's ridiculous. It's not your pricing under a self-insured policy, and again, arrangement. The actual payer, owns the data. And this is so important. And we're making progress, but as you can tell by my frustration, there are still people out there, big entities, that play dirty.
Well, AJ, I would add, I think, contributing to the problem, in addition to what you've mentioned, is it's educating the employer for the type of contract that they're signing. Unfortunately, a lot of those contractual engagements give the large player the power to do exactly what they're doing. The penalty is built in if they carve portions out, and they're stuck with this egregious penalty. When you've got players trying to engage these same employers to present a better solution, but unfortunately the economic downside based upon the penalty that they've signed onto in the contract prohibits them from choosing a better solution. And so it's also about really getting out there with heads of HR, benefit consultants, and ensuring that employers are signing on to something that is livable, that is appropriate, that allows them to make different decisions if they have a better opportunity to support their benefit. And it's just not well understood, unfortunately.
Mm-hmm.
Do you have a question?
Well, I just want to tell AJ there's some help coming. It's called class action lawsuits. The fiduciary rule of the Consolidated Appropriation Act.
408B2B.
The lawsuits are getting teed up, and none of what you're talking about is legal anymore.
It shouldn't be.
It's not, and it used to be. As a matter of fact, insurance and Major League Baseball were the only two industries carved out from federal antitrust laws up until recent legislation. So I think you're going to see a lot of changes, and the thing that's going to really trip it is the first major lawsuit hitting the front pages of USA Today and Wall Street Journal, so on and so forth. People are going to realize. And by the way, a lot of this litigation will be against plan sponsors, unfortunately, who who are not the ones that are the bad guys in this.
Yep.
But as soon as one of them gets sued, they go and let's say, oh my gosh, my supply chain needs to clean up its act, and if they won't clean up their act, I'm moving my business elsewhere.
Yep.
And so that's the, and by the way, CVS, no offense to you, if you look at the transparency and coverage rules, you'll notice that all the pharmaceutical stuff got pushed and is now like undefined, and they deleted from the GitHub site the RX machine readable file formats and stuff. That's all big lobbyist crap, basically. That stuff should be implemented, and we're in the process of implementing with some who want to be good guys to beat down some others. We'll say Optum instead of CVS. Beat down some of the bad guys who are not behaving appropriately in what should be a real mass marketplace is what this is.
Yep.
Thank you, Mark. Susan, I wanted to come back to something that you brought up. So what does it look like if the system is completely gutted?
Yeah. Where do we begin, right? At the end of the day, starting with the consumer first, and the first element is giving them information in their pockets and at their fingertips. Earlier we talked about the price transparency information that's available, but it's not digestible, it's not consumable by the entity that is consuming that care. So the first step is making it consumable in an app, on a website, in their pocket, wherever they're getting that care, whether it's in a virtual or a local setting, and so that is the first step. The second step is somebody guiding them. Like earlier we were talking about the Sherpa or guide or whatever you call it. Consumers need that. The health literacy problem that we have in our country, people just don't understand where to get care, where to get high quality care. Just because you have an insurance card today doesn't mean you get access to care or high quality care. And so having a guide or information on this provider is high quality, this pharmacy is high quality, how do I get value, is really important. And then the third element is patient-led, consumer-led, and then empowerment of the consumer. Consumers today in healthcare are not empowered, they're not guided, and they don't have the tools to access care and how they need to be. And so one of the key elements that we're doing in our organization is giving that trifecta to the consumer and putting it all together, putting the pieces together, not navigating, walking into a medical building, then the pharmacy benefit building, then the behavioral building, and then the 15-point solutions that are spread out. Now on my phone, I have 17 apps. I don't know how to get from point A to point B, and the information isn't being shared. So what the world in the future looks like is you're going to a single place, information is seamlessly flowing back and forth. You don't have to wait 7 to 10 days to find out if a medication is covered or a benefit is covered. It should be instantaneous. The administrative bureaucracy and the burden has to just go away, and leveraging technology to really deliver that. And I think today in healthcare, we're not leveraging the technology. I mean, this morning, the metaverse that we talked about, it's here. How do we leverage it? How do we deploy it? How do we put the consumer at the center? And so that's really what the future is going to look like. And we got to listen to the members first and deliver much better care than we have today.
Yeah, I'd like to add to that, which is efficiency is everything in healthcare. I often say in my company are the best plumbers in healthcare because we deal with all the unsexy things like the 250 different eligibility file feeds I receive from TPAs and carriers. We deal with network management, billing, reimbursement, formulary management, prior authorization workflow, and all of these things take people, time, and oversight, and so we focus almost on the opposite end of what Snezana is speaking about, which is us looking at all the efficiency. How do I beat the big three at their own game if I don't purchase drugs at their same scale? It's through efficiency. I often say there are two lines in healthcare, and people tend to ignore the second one. The top line is your gross purchasing power, or if you're in spread pricing, your margin. And your bottom line is how much does it cost to administrate a plan? And so we have spent years building on our system, Judy, which is the first enterprise platform. If you remember my background, ERP background, it's the first enterprise platform that contemplates every single workflow in our company, everything from PA, network management, plan setup, underwriting, everything runs on Judy, short for adjudication. She's the brains. But why did we do it is because I need to basically unleash the lowest price point for the administration. And the other thing is that makes us very different from anyone else is we don't make money on drugs. I think if you're in the administrative business, you got to make a decision ethically. You know, if you have the ability to encumber price and artificially mark up the price of a drug, I think that's insane because you can't mark up a medical procedure. You know, so what gives the American system the right to encumber someone's medication arbitrarily? You know, and there's no right or wrong. I always point this out as very simply as there's one price in the supply chain at any time. Everyone should have access to it. And so there's a lot to unpack here, but I think it's efficiency and it's the ethical process. If you are charged with being the administrator of a plan, you should not be making money on drugs.
Can I add two things?
Yes, please.
I think what I'd change in the system as well is the economic model that's underlying it. If you think about on the PBM, the client side, there's so much attention put on this thing called the rebate guarantee. And it's confusing, it's complicated. AJ,
Can you explain it a little bit?
Yeah, just simply, clients are looking for how much of a rebate dollar, payments from manufacturers, can you guarantee would be paid to me per brand RX that's dispensed? And there's a lot of things that go into it. You break it out between retail and mail and specialty. There's different arrangements you can have. As that starts to change, and we've looked at a model called guaranteed net cost, I think that does give clients more predictability. You mentioned it's not the perfect model, but it just says you shouldn't pay more than X dollars per script. Brand, generic, mail, especially, you can break it out different ways. But I think that's one way you can build a bit more simplicity into the design as that we have today, is on that side. It's not perfect, there's a lot that needs to happen. Will we see it through NADAC? Will we see it through acquisition cost models? We'll see what gets us to a better model, maybe a mix of those. But I think that's one thing that if you were rebuilding the system from the ground up, you'd probably think very hard about what is the economic model that sits between all the entities. The other piece I'd mention on efficiency is the benefit design itself. Affordability in one aspect certainly comes down to what's the ultimate cost of the product being purchased, but how much is that passed on to the member themselves? In the case of like the insulin example I shared earlier, the main reason why someone might pay a high price for insulin oftentimes comes down to it's a deductible design, there's no preventive drug list, and that customer's not passing on rebates at the point of sale. Those things can bring down and bring more predictability and affordability to the member, to the patient at the pharmacy. Those are all things that we can consider inside benefit design to think about affordability, think about simplification, make the whole benefit a bit more simple.
You know, playing that forward a little bit, I think we as consumers just need to challenge the rebate game, period. It's, you know, the notion of 100% pass-through really is meaningless at this point because all of the largest competitors simply reset what the cost actually is. So it's just a bit of a game. And so until we can get away from what the AWP spreadsheet tells you as you're looking at brand generic and the different channels, we're gonna be stuck in this swirl. And so you just, effectively, we've got to say no thank you, and there really shouldn't be a rebate involved, period. But unfortunately, it's become a cash cow for several players, and until we do away with that, we're gonna be in this swirl.
Well, who do we think is maintaining the rebate game? Is, you know, I'm interested to hear your thoughts. I mean, I certainly have mine who maintain it, but I'd like to hear the panel's idea on who wants to keep the rebate system the way it is.
I think it's the largest players, right? It's one of the largest sources of revenue, period. And there are plans, frankly, that rely upon those dollars as well.
Yeah, I mean,
The drug manufacturers too, who don't mind keeping the game the way it is.
If it doesn't impact their best price, that's right.
Are rebates a way around the MLR rules and 80/20 rule as a way to increase gross margins around the pharmaceutical piece of the medical spend? Maybe that's it?
Well, I mean, I think it's how you account for it. You know, if you're a vertically integrated entity, it becomes much harder to truly account for dollars if something's offshore and it now becomes a GPO fee or something's price protection. And there's an entire afternoon we could spend on these topics. But, you know, I often say is, you know, when we started our company in 2019, we hired McKinsey to sit down with us. Yeah, and that's a plug for McKinsey. No, but, and we basically sat down with them and we said, you know, I think I understand pharma, but it's been a while since I worked there. What do brand managers really think about the rebate game? And we did this very important study, and this is free research for everyone, and 50% basically of the brand managers thought they were winning. like I'm winning in this system. I'm like one of two in my therapeutic category. This is awesome. I've got my competitor kicked off to tier 2. It's amazing. And there's another group of brand managers, almost the same exact size, and they're just like, this stinks. I'm the loser. I'm not selected. And then, over time, if you look at gross to net for brand and specialty drugs since 2014, the curve has inverted. And what I mean by that is every price increase by pharma is net negative to them because the PBMs are taking more and more out of the system. So for every $1 you increase as pharma, $1.15 is going out the door, and all you have to do is look at any of the charts that shows gross to net going from, I could quote this in my sleep, from 51 to 49 to 47 to 46, and it's going to, over a long enough line, technically it should go to 0. And so this is something that I want everyone to understand, is that there's no simple solution to it, but the problem is that too many people are allowed to make money on rebates, when if it was truly 100% of the manufacturer-derived revenue, you notice I did not use the word rebate there, if 100% of the manufacturer-derived revenue, because they pay out a metric ton, went to the actual patient in the plan, a lot of our problems would go away. But the problem is there are very complex intermediaries that have their hand out or very hidden. You can't see what's going on, and that becomes very difficult. So it's a very difficult question, but I always want to point out is I think if pharma could undo it at this point, they would not want to continue the game that they're playing because they don't win anymore. I just want everyone to understand. They're profitable entities, don't get me wrong, but they don't win on the same scale as the administrators of the pharmacy benefit.
And Josh, what do you have to say about that?
Well, I think there's other entities involved. The guaranteed net cost model still leverages rebates to get to the lowest net cost, but it doesn't put a guarantee around it. So I asked myself the question, we've had it in the market 4 or 5 years, why haven't more customers taken that? Is that because they just are trapped in an existing model that consultants somewhat, I'll say, have established in their spreadsheets of how they evaluate PBMs against each other? That could be one factor. I look at the point of sale rebate model, like take those dollars and put them right into the out-of-pocket costs that a member experiences. Still, a smaller percentage of clients choose to do that than not, so why not? It could be for very good reasons. They'd rather take those rebates and spread it across the population and pay down premiums, use it for other things. I think it's a very complicated system. I would agree. I think if you restarted it, I don't think the industry at large would say, let's have a high list price and knock it down through a rebate. I think we'd use other models, but we've got to chip away at that model today, and I think it's through different economic models. It's putting pressure on where margin is made by different companies in the system. But I do think the best model is one where it is leveraged to the consumer who's paying the price at the end of the day. When I get questioned about affordability for a patient, like I said, oftentimes we'll first look at the benefit design. Is it putting a high percentage cost share on the member? And then if that product is a lot less expensive through a rebate, is that being passed on to the member? There are solutions, at least today, within the model to, I'll say, temper some of the negatives of it while we figure out how do you change the whole model around it.
So can you give an example of what you think would work better than the model that you've described?
Well, we've seen companies come to market with just pure lower list price products. Right? Just have it be a lower, take the Hep C, right? You have your Mavorets versus the Gilead products of Harvonia, stuff like that, right? They just said, we're going to price our product 40% or so less than the rest. I think we could see more models like that. We have to then, I'll say, that's why I keep always tying it back to the economic model. You don't want a model where a consultant and client are saying, well, I only measure value out of you, the higher the rebate dollar amount is. Because then what's the incentive for that lower cost product that gets there just because it's a lower list price, it's discounting itself through a pharmacy, some other means. So I think that's where there's a foundational element that as that changes, it changes the market around it. It's not perfect. We'll need a lot of other changes. There's a lot of players in the system, hence the wide array of folks in the room. But I think as those things start to change, you see change around it. I don't know what your perspective is, given how you consult and support and represent a lot of clients.
Yeah, the interesting thing is with the way the spreadsheets are working today, more often than not, it's not advantageous for the client to choose the rebate at the point of sale, which just shows you how fouled up the spreadsheet exercise is to suggest that passing the rebate at point of sale when the consumer's standing there is actually going to cost that client more all in, and it's because of the hands in the pot.
Well, I mean,
with the alternative.
I was going to say, the point of sale rebates, though, is just a joke. I mean, you know, I'm going to say it's another way to make more money by the administrator because you're not passing the full amount. It's an estimate at the point of sale. Then I got a recon on top of a recon. And if anyone's ever been in the audit business in PBM, first of all, 1 in 60 plans ever audit. Of that 1 in 60, 1 in 100 will ever do a forensic level audit, which means you go on site to the PBM and do a rebate audit. You know, and so the whole thing is at its core, unfortunately, a horrible catch-22 with the largest entities that manage our healthcare system today, because they're all publicly traded. Their fiduciary responsibilities to their shareholder to make more money. They have no growth left because they bought everything in sight and they can't buy Humana and Anthem. So this means they're basically a utility stock, which what does that lead to? I have to meet or exceed earnings. How do I exceed earnings on a finite number of people? That means I have to take more money away from a patient or a plan. I mean, you can't challenge these statistics, and what the only hope I think the industry has to dig their way out in a 2.0 model is one, let's just stop making money on drugs if you're administrating a plan. The second thing is you have to focus on efficiency, because I do think the big three can survive. They just need to actually become efficient for the first time. I mean, I often point this out. Pharmacy benefits, for those in the room that are economists or finance people should agree, it is the single greatest industry in the United States. It's a pure inelastic demand curve. Prices only go up every year, and through the proliferation of specialty, the average cost per scripts goes up. And so nothing else in the United States is like this. And what does that breed? Laziness. Inefficiency. And so the time is coming. I think there's some incredible folks out there that are trying to challenge this in a variety of different ways. And I think we're finally paying attention to it because prescription benefits represent 20-30% of healthcare dollars, depending upon who you are as a payer.
Yeah, AJ, I would completely agree that the consumerism aspect of pharmacy is just starting to take off, and it is perhaps one of the few silver linings that COVID gave us. I think it provided consumers the opportunity to stop and reflect, how else can I get my prescription and what should I be paying for it? And it allowed consumers, I think for the first time, to say, this doesn't feel right, like this price doesn't feel right, where else can I look for a better price? Good helped enable that, Amazon helped enable that, and it's frankly, I think, the beginning of a bit more of consumer pushback on, I actually have the opportunity to do something different, and the price isn't necessarily the price. Okay, well, we have,
That was going to be my question. If consumers spoke up more, would that help initiate the change?
No.
No.
Well,
Yeah.
How do you know the price of a drug in the United States? I've been in the supply chain for 22 years. Just so you understand, everyone has a price in the supply chain. I don't care if we spend an afternoon making a pallet of drugs for generic or brand, and then I sell it to a wholesaler. I still have a unit cost on an NDC 11 or some code basis. And then I sell it to a hospital system and a pharmacy. We still have a drug price in the United States. I get to a PBM contract, it's 50 to 200 pages long, there's not a single drug price in it. So what hope does anyone have? Empowering someone on price is an illusion of what data is being fed to you. So until you break free, and this is what I find so important, you must make a decision. Do I administrate a plan, or am I in the fulfillment business? You could be a hospital, you could be a pharmacy, and you could make money on drugs. There's nothing wrong with that. But if you're an administrator, the only way you're going to get to true price is buyers and sellers freely communicating on price. There's a gag order at the pharmacy between any carrier PBM and the pharmacy. You can't communicate price except if it's the price I give you. And then the other part of it is no one knows what the price is. I often say if you were to go to Walmart and pick up a box of popsicles for $5 and go back next week and it was $50, you would stop dead in your tracks and be like, what the hell just happened? But we don't have that price visibility. And no one understands what a fair price is because we're free to encumber price as administrators any way we like. Now, obviously, we don't have that model. I want to make that very clear. But I want to make this, one point that you should remember, going home today is drug pricing in the United States is encumbered in the last hop of the supply chain at the sole discretion of the administrator to any number they can imagine, anything. And that's disgusting. And I hope you feel my rage because I live it every day. And the people that could make a difference is anyone in this room that's a payer, anyone in the room that's an administrator. You have an opportunity to change the system with us.
Yeah, that's where I think it needs to go. I think consumers help as employers pushing back within their employer to say we need a benefit that actually makes sense, but it's going to have to be the employers who no longer are willing to sign contracts in that fashion. And I do think there's a small silver lining around what's happening in the cash space. Good also helped enable consumers to better understand what their alternatives were. But to be very clear, there are contracts behind the scenes with the big PBMs that are also enabling that price. Their hand is in that equation. But it's starting to put together this notion that maybe I should even check the cash price outside of my benefit. And there are alternatives. And I mean, perhaps we're going to end up in a world where the benefit is actually all cash-based and it's actually not running through an administrator. It's conceivable if a pharmacy can get out of having to pay the egregious fees that they are, it's an interesting question to ask.
And I would just add, I mean, to your question earlier, there is a tremendous opportunity with the consumers. Like, for example, we offer members the pharmacy marketplace, which is agnostic of insurance, cash, coupon. You make the best decision. And 9 times out of 10, cash is better than insurance. And so I talk to so many self-insured employers who have employees who say, then what was the point of my pharmacy benefit or my insurance if I was able to find it cash? So it is that empowerment of the consumer. Patients are becoming more impatient as a result of COVID. They want all the information at their fingertips, and I think transparency tools to the consumers will certainly enable and let us go a lot further. But to the points that AJ and others made, it's all about, well, what was the real right price? And I think now you have a lot of retailers who are coming through and saying, I want to throw in my real price, because sometimes my real price may not actually be displayed through other places or tools. So it's very complicated, but I think consumers are going to play a huge role.
Play a note one more on this is that, cash cards shouldn't exist if funded entities did their job. If carriers and PBMs passed an unencumbered price through. Now, why is the system the way it is? Think of it as if you're a PBM or a carrier and you're a casino. Statistically speaking, I have a 95% chance you're going to take any price I put at you at the register. That's true. Cash market, 5-6%, that's it. And even if I don't catch you on a 20% markup at the register, I'll catch you on a 10% on the back end of a cash card. It's a sound investment. Stick with that structure. And so, look, I agree. I think broadcasting, unencumbered price, buyers and sellers freely communicating on price, that's how every efficient market operates. Price settles itself at that point. But my point again is you can't have anybody making money on the drugs and artificially changing the price of the drugs. That is the root of all the evil. And I think we're going to come to a day where this reckoning shall happen, and it is. There are people like our organization at Capital RX. We don't operate on that. We don't establish price. We don't manipulate price. It's full pass-through. I let the pharmacy define it. You get to use NADAC or the lesser of. It's up to you. I don't make money on drugs, and that's the way it should be.
We have about 5 minutes left, so I have 2 more questions, and then let's open up to the audience. So Josh, I had a question for you. That the FTC has launched a probe into investigating PBMs, and I wanted to see how you all are preparing for this.
If I could comment, I would. I'm not involved in that, so I couldn't speak to how we're preparing for that. But I'm sure we're very well prepared, and I expect it's part of the overall kind of market investigation of the whole space. So, yeah, but we're well prepared.
And AJ, I had a question for you about the fee disclosure requirements. Was an adjustment made to ERISA in December. So if you could just briefly summarize that and share your thoughts, then we can discuss it a bit.
Yeah, it's the gift that keeps on giving. So on December 21st, in the middle of the Consolidated Appropriations Act, which was supposed to kind of dig us through the COVID setbacks, all of a sudden on page like 500 and something, there's this amendment to ERISA, section 408B2B. Now, if you understand ERISA, which was written in '74 by the Department of Labor, it contemplates 2 important things in this country. One is finance, like 401k and pension, and the other one is healthcare. And what's fascinating is the Department of Labor did a really good thing at the turn of the century. They started to hear stories about someone having a 401k plan that has a blended return of 6%, but the loaded fees are 7%. That doesn't sound like a good thing. And so what the Department of Labor did is that we need to disclose all these fees, like everyone who's selling there. And they cleaned it up, and they did a magnificent job, but they didn't have the bandwidth, from what I understand and what I've been taught, and that they said, one day we're going to come back to that for the healthcare portion. And so, lo and behold, in December 21st, I'm just reading through things, you suddenly see this gift. You're amending Section 408B2B, which basically states the responsibility is the fiduciary, the payer, that they must ask anyone that provides any type of benefit service, both direct and indirect compensation that is made. And I'm just trying to summarize this. And so if the actual entity, I don't care if it's a PBM or carrier or broker, doesn't respond, you basically have a 30-day clock, at which time you then go to the Department of Labor and write them a love letter and say, what am I supposed to do? But the point is that what am I supposed to do with the information is one, is there a conflict of interest? Like, is there something that stinks? Like, why is this broker making $6 a script? That seems like an awful lot of money. The other one is it fair or reasonable, that amount? And so a lot of people have asked me, like, what's fair? I go, well, this is my opinion. It should probably be less than 1% for comp on someone who's who's just providing consultative services, but that's me. But I think this is a start in the right direction. I want to say when we did this in finance, it took 10 years. And so we're at the very beginning. And I think, some people are very smart. They're trying to position around this. They're trying to maneuver things to get it out of entity A so I don't have to disclose it. But I think right now you have a real opportunity for people to understand who's making decisions recommending products and how much money are they making.
And regarding the fee transparency requirements, Josh, at CVS, do you think you should have to abide by this?
Yeah, if it becomes regulation, absolutely. I mean, we have clients that require high level of transparency, NDC level rebate reporting, member cost share reporting. So yeah, I mean, if that becomes a requirement, we'd absolutely meet that, and we meet that today for clients that require that as part of their contract.
Yeah, I was going to say the other point was, back to the FTC's survey. I don't want to even use the word investigation. It's interesting to me because I always watch the behavior of large vertically integrated entities. So if you're under the microscope, you would think, let's not do anything. But, I see, not to pick on CVS, you buy Signify and now you go after Kano. I'm just kind of like, doesn't seem like you're afraid of anything or anyone. Because I remember back in 2016, we saw the end of the mega mergers with Cigna and Express and Aetna and CVS, and everyone was like on their best behavior, like, we can't buy anything for a while. Let's just keep it on the DL. And now they're just like, let's buy something else. Cue it up, bidding war. Let's go after something else in the supply chain. And so, I hope they find something. They're super talented, amazing folks at the FTC. I really hope they take a hard look at what some of this stuff is going on, especially the anti-competitive behavior.
All right, is there anyone else in the audience that has a question?
I have a question.
Yes.
This is kind of a little bit off of left field, but I'm so curious to know what you think. So the United States and New Zealand are the only countries where drug makers are allowed to market prescription drugs directly to consumers. That is shocking to me. Every other country in the world doesn't allow it. I just wondered how that plays into this discussion.
And I just think an attitude of consumerism generally is probably a problem in our culture, in our nation, and to bring a consumerism model into healthcare probably doesn't help either. And I mean consumerism just in terms of, I see that, it seems attractive, I want that, and pursuing it as opposed to going through the right, if you will, I guess, prescribing channels, evaluation channels, et cetera, to say, is it really needed? The lowest cost drugs are never the ones that are being marketed the most. So I'm not sure it's a positive thing for us.
I mean, I think it was kind of cute when it was the Viagra days and you saw the guy doing the belly flop in the pool and you're like, that's pretty cool, like erectile dysfunction, haha, okay. And, now it's just like Crohn's disease and it's like always the same commercial. It's people celebrating, like a fiesta or party or a sunset on the beach. And, I don't believe that if you are going to have on-air time, I don't think you're talking about clinical studies or side effects or the efficacy of the drug. And so I think, part of me says, look, communication's good, but there should be some rules around if you're educating someone versus just making it look like it's a happy margarita happy hour or something. I don't know.
Okay, I think we have one more question.
Actually, yeah, this is my actual first question of the day, because I'm not going to make a speech. It's really a question for James. So, have any of you seen a case where some sort of a prescribing module is provided to the consumer to take to their physician, where it knows their PBM, it knows their formularies, it knows, what's on, what's not, what's a generic, what isn't a generic, where at the point of prescription, the doctor could actually say, okay, hey, this is going to take care of you, and it's $3 a month instead of this other thing that's going to cost you, $3,000 a month. And
Yeah.
therefore, I'll
Yeah.
prescribe it, and when you
Yeah.
get to the pharmacy, it'll be a no-brainer, and it'll cost you $3.
Yeah, I can start with that. So, for example, in our organization, so prior to this, over the last few years, there was real-time benefit check, right? The PBMs, all the big PBMs, the real-time benefit check, but it's not readily available in all consumers' hands. And so what we're trying to do is to say exactly, not just what's on your PBM formulary, but to be able to give the consumer all of the information, right? What's the right pharmacy, what's the right either cash price or on benefit price, and then where are you in the deductible? Because the problem today is you have so many consumers that are in these high deductible plans, and it doesn't matter what the price of the product is for clients, for employers who have a mixed deductible between the medical and pharmacy benefit, you have to meet that. And so really being able to be fully transparent with the consumer of where are you in the deductible, what is the benefit design, and what is the price of the drug, and not just the drug, but is there an alternative of that drug, and giving all that information to the consumer. And then the last element that's still missing is not just the real-time benefit check and the information, is the administration of the utilization management on some of the products, like prior authorizations, clinical criteria, what's required of you as a consumer to actually get that product. So we're making progress as an industry to get that information in the hands of the consumer. We're not quite there yet to have it readily available to everyone, but we need to get there as an industry, and I think we all got to work together to strive to get there.
Yeah, there's an API integration with SureScripts, which is owned by CVS and Express Scripts Cigna, and also Cover My Meds. So, it really goes back to the EMR, EHR integration, and SureScripts has been at this for 15 years. I mean, as far back as I can remember. They do a very good job of providing that information.
But is it for the benefit of the consumer or the benefit of the physician?
For the physician.
Physician.
Yeah, so that's really two completely different things, right?
Well, if you have a tied through, so if you're the PBM and you have this, so the first thing is you want to create efficiency so a physician doesn't prescribe a drug that's not on formulary or, for whatever reason, it's just not an appropriate decision. So that's the first thing is you want to push information to the physician and then you want to pull the information back. And that can be displayed through the patient portal or the app, which is, hey, here are my options, and here are the costs associated with that, down to your accumulator. We provide that on our application every day in real time. So, I think it is there. You just have to invest in the infrastructure, which is what I think a lot of people have done or are doing.
Are you doing some of that for Capital RX?
We do it today. Yeah, for both are integrated with. Yeah.
Part of the challenge, though, with again the PBM-led integration in the EMR through SureScripts is you're often making best effort to make sure that your own pharmacies tend to populate kind of at the top of the search queue. So there are ways to manipulate it. So back to your point, having it just present in more of a raw fashion to the consumer, also valuable, which is what Transcarent is pushing on.
Yeah, and I think that's important too. When you think about all the options that are in the marketplace, don't just show my home delivery pharmacy, my specialty pharmacy, and then some of the retailers. There's so many pharmacies in the marketplace.
Yeah.
Right? We heard from Mark Cuban, Cost Plus, from Row Pharmacy to other virtual pharmacies. Give me all the options. Inpatient, right, in the hospital, in the local setting, independent pharmacies, virtual pharmacies, we should have that choice and that open market. And that's really what's missing today. And so having a universal sort of platform that consumers can access is where we need to go.
Yeah, we use an agnostic network, so we don't own any fulfillment assets. So I don't care if you use Gene's independent pharmacy or a big box store or a chain. Let price and convenience sort that out, and I don't encumber price, so it's them broadcasting to you, the patient, in the plan.
But you know the price for Walmart
Sure.
specific
Yes.
drug
Of course.
Yes.
ahead of time at your app.
Yeah, it's how your network arrangements work. So depending on how you contract, but you have obviously on an NDC 11 basis your prices cataloged. Yeah.
And you know what NDCs they have at Walmart?
Well, so if it's brand, it's a lot more straightforward. You might have a basket of 6 to 8 drugs. So if you have generics and you have 23 different manufacturers, you may look to the GPI or a higher subset and then get an understanding of what price is. So when they push it, you begin to understand, what the drug that's being dispensed. We often use what's most commonly dispensed by chain code, to give you a view into the logic, but it doesn't change much, especially on generics, and brand, as I mentioned, is very straightforward. So a high degree of accuracy. And I think the other part of it is a lot of the drug prices in certain GPIs trade very similarly, to that point.
Thank you for these great questions. We're going to have to wrap it up.
Yeah.
Now, everyone's eager to get to lunch, I'm sure. But this is an excellent discussion, and if we can continue it one-on-one afterward, that would be great. Thank you all.
Thank you.
Thank you.
Hope you enjoyed that interview with AJ Loiacono. If you liked that, we have plenty more content on our YouTube channel. You can also find us on Facebook, LinkedIn, YouTube, specifically our YouTube channel. Look forward to talking to you guys in the future. Thanks.